Markets and investors prepare for earnings and the Fed FOMC meeting and results coming out on Wednesday when Chair Powell is going to speak and do what he does to markets, given the projected interest rate rise of 75 basis points. The big debate is, what are they going to do, 75 or 100? And right now, they still have not indicated that they would do anything other than 75. They never said for sure that they would do 75, but that was the last rate hike. They said that the expectations are future rate hikes would be the same until otherwise noted. So they're definitely not going to surprise the market with 100 basis points. They do not like to surprise the markets. The markets like certainty. The Fed knows that. They're trying to regain and maintain credibility. And if they surprise markets, well, that affects their credibility. So if they were going to do something different, they would telegraph it, which they possibly could tonight or tomorrow ahead of the actual rate hike. If they see some kind of data that would give them a reason to want to raise rates more than 75 basis points. But markets are pretty flat today. NASDAQ's down almost 1%. S&P and Dow are pretty much flat. We'll take a look at Bitcoin here. Bitcoin has been coming off of this pivot high here of this range and kind of unwinding into the Fed meeting like we've been anticipating. It did reach out to 24.2, the upper band of this last region here. A lot of shorts getting liquidated there at the last minute, thinking the market was going to pivot and turn around, but it's making its move downward now. And something to kind of notice here is that these moves have been pretty much, symmetrical in terms of reversion back down to the base. As the price rises up, it reverts back to where it started and tests that lower level again. So I think we're definitely going to see a test of this $19,000 level. So your first test is 18.9. Next test is going to be 18.6. And then, of course, that's when we get down into the 17.6. And we'll have to see if Bitcoin's going to hold. And if Bitcoin holds that area, then this could be the beginning of putting a bottom in for this range in the current cycle that we're in right here, this downward cycle and trend that we're in. Bitcoin could potentially be putting that longer term bottom in right here if it holds this level after the Fed raises interest rates. And of course, that would be barring any other events out there, war escalation, pandemic rearing up, banks collapsing, credit markets collapsing, whatever it is, any other kind of a black swan catalyst that could take the market down. So right now, that's what we're looking for. We're looking for Bitcoin to kind of unwind into that move. If it breaks this level, then we're down to that next level that we've been talking about, 15 to 16,000, and then ultimately 12 to 14,000 is the last line of defense for this range of support here. And of course, we know that it can break below there given a big financial event. This was the pandemic and shutdowns that were going on here. And it would take a serious event for that to happen again. So this could be the ultimate test of this range low. And if Bitcoin can hold up, if markets can hold up, if we look at the Dow, kind of the same thing. The Dow's been kind of working its way down, coming back to test this pre-pandemic high. Bounced off of it right here recently, back in early to mid-June on the June lows, has been bouncing ever since, and that was a major area that we were targeting, is that pre-pandemic level. Up here, I was saying markets needed to kind of go back and test that because that's where markets were before the $2 trillion injection. But of course, markets hit these highs, pre-pandemic highs, coming off of trillions of dollars being injected from 2009 on from right here. So that liquidity has to get unwound at some point. It's got, the balance sheet has to get unloaded by the Fed at some point. But right now, it's all about inflation. It's all about interest rates. The NASDAQ did not quite reach pre-pandemic, nor did the S&P. It was just the Dow Jones. So there's still some downside to go in the NASDAQ and the S&P to test that pre-pandemic level. But the Dow bounced on it before. So we'll just have to see what that looks like when it gets there. Here's Bitcoin on the daily, kind of doing pretty much what it did the last time, into the FOMC meeting and rate hike, kind of working its way down. Last time, this was the big drop ahead of the meeting. So the question is, are we going to see another drop similar to that ahead of this next decision? Let's take a look at what that was. So this was ultimately from the range low. That was about a 36% drop. from the base right there. That would be here. So let's just base it right there. So current levels, if we drop 36% from here, that would put it down to about that 14,000, 14,500 range. So that's a little bit of confluence out there for that. So these are the things to kind of keep an eye out for here the next couple of days. But right now, the other thing is the bond market. Bond markets are definitely anticipating recession. We talked about this the other day. Yields are still relatively low. The yield curve is inverted. The 2-year is ahead of the 10-year, meaning that the bond investors are anticipating a slowing economy for the next couple of years. So they're trying to protect the capital and hedge against any kind of a downturn in the economy until they can get out ahead of that and kind of understand how deep a potential recession could be. And that's what all the talk is right now. So that's what we're going to need to wait to see what the Fed has to say about recession projections, inflation measurements and projections, and ultimately what they're anticipating for future rate hikes. So until we get some guidance on that from the Fed coming this week, we'll just have to wait and see what the markets do and how they react to that. So these are the things I'm looking at. I'll see you in the next video.